All right, guys and gals, back in the action here once again. It feels good to be back here with you all. Hope you all had a great day out there. But it's Wednesday evening. It's May the 22nd, 2019. It's about that time of day again. Time to get back to work, right? My name is Joseph, by the way, and this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. And my job tonight is pretty simple. My job tonight is to find the best levels, the best setups, the best scenarios, right? The best opportunities we see setting up for tomorrow. That's Thursday's trading session. And tonight we're going to cover oil. We'll grab some S&P, we'll grab the Nasdaq, the gold, and we'll wrap up tonight on that mighty euro. I'm going to start off with the Texas tea, the black gold, the crude oil futures tonight because, as you may have saw, right, quite a big move. And anytime I see the market make a move like that, like we saw today on crude oil, I always know to expect one important scenario. So let's jump into that chart here first here on oil because I've got a lot of information to talk about tonight. But really, it all breaks down to a big move down. Now, as you can see here, we get the rule of threes in play right now. 1, 2, and 3. So 3 legs down. What do we always talk about when a market goes 3 big legs down? Yeah, usually we're going to start going sideways, right, the following day. So we're definitely anticipating a range-bound market, whether it be a triangle or a rectangle. And with that trading range environment, I'm really looking for one of 4 scenarios, honestly. One would be a move up and back down. The other would be a move up and a reversal. Hopefully we get that tomorrow. The other, of course, would be the move down and back up. Look forward to that by tomorrow morning. And the other would be that breakout going lower, right? And what we look for our next round of targets. So I've got 4 different scenarios, I guess 5 if you want to say sit on your hands inside the middle. But we're going to go over how to buy the low, how to sell the high, right? How to focus on failures, but obviously, too, how to trade those breakouts because we got some big targets below, but boy, oh boy, wouldn't it be nice to get that short covering rally right back up where we came from. I'm going to talk about all 4 or maybe 5 of those scenarios here tonight on tonight's newsletter video. Over on the S&P and the Nasdaq are both very similar. They have a bullish bias, of course, from yesterday. And then as you can see here, we've got some lower highs, we got some higher lows, and of course, we are consolidated here ahead of some major news and the holiday weekend. We'll talk more about that here in just a moment. What do we know about this? We know we get a bull market, right? That bull bias into this trading range. It tells me, just like oil, right? Just like oil, I really have 4 basic scenarios, right? I want to buy it as it goes lower. I want to sell it as it goes higher, right? Those are my 2 main components, and we'll talk about those and the specific setups I'm looking to use for that tonight. But at the same time, though, right, how do we trade a breakout? What does a breakout look like? How could we trade a breakout of this range, right? And then could we be looking for a big measured move target up around that 2890, 2900? Is that in the cards tomorrow? How can I confidently trade breakouts? Because as you can see, most of these breakouts haven't been very successful so far. So I've got 4 different scenarios, buying and selling, fading breakouts and trading breakouts. We're going to break all that down here with you guys here tonight on this video newsletter. Over the Nasdaq, Nasdaq is very similar, a little bit different, right, on the Nasdaq, but same basic idea. Nice bull run, right, into what really has become higher lows, lower highs, flat moving average, right? If I had volume on price right now, right, all the volume will be piled up right there. So bottom line is we are balanced right around that 74, 74.40, 74.30 area. And with that bull bias, I've got 4 scenarios using that bullish bias, right? Can I buy? Can I sell? Or do we trade breakouts? What's a breakout look like, right? What's a breakout look like? How do you know when you can trust them? Because, we've already seen a couple of examples here, right, where you can't really trust those breakouts. So how do you know how to trust a breakout? How do you know when to fade or buy low and sell high? I've got 4 different scenarios and about 4 different entry patterns because of that bullish momentum that we're watching here for tomorrow. So make sure you stay tuned on that. Over to the gold and the euro. Now, without sounding too redundant here right now, gold is very similar, right? A bullish move up into a trading range. Now, what's interesting here about gold is that we actually have 3 different ranges on just this snapshot. I've got that range from earlier on in the month. I've got the range from late yesterday, which didn't really look like a range until this morning. And then, of course, we got this triangle here. So I'll tell you right now, with some major news on the horizon tomorrow morning and with 3 different ranges here to worry about, we've got some work to do here on the gold. The short-term bullishness is definitely a big clue telling me I want to buy down below these lows. But there's also one very big clue here, and that is that recent strength coming lower. I'm going to talk about why that recent strength is so important and how we're going to use that in combination with all 3 of these trading ranges. So if you're a gold trader, you definitely owe it to your trade account. Stick around tonight and watch this section on gold tonight on this video. And then, of course, over here on the euro, not a lot has changed. We got some rising support, some falling resistance. We are range bound right now. And it's pretty obvious, right? It's a bear bias overall. A little bit of the opposite of what we have on the on the gold and the E-minis right now. But really the same basic idea stays the same. It's a range-bound market, right? I want to be a seller as we go higher. I want to be a buyer as we go lower. But you know what? I'd be lying to you if I said I wasn't looking for a breakout tomorrow. We get some big reasons why. We'll talk about that in a moment. But what would a breakout look like? How could I trust a breakout higher? And if we do go lower, where am I trying to go down here, right? Where's our next target down there? We're going to talk about all those clues here tonight on this video newsletter. So we got everything loaded up, right? The boat's all loaded up. We got plenty of snacks, right? We got plenty of good stuff to talk about, and we are off to the races here. This train is leaving the station, and it's time to get on it. Gold, euro, Nasdaq, S&P, crude oil, we're ready to go. Before we jump into the video, though, before we jump into all of these charts and put the plan together, I just want to remind you to join our mailing list. That way you never miss another great video. Right before I publish this video on our YouTube channel, I fire off an email to our entire mailing list, right? Only the good stuff. I never rent or sell or share that information. It's only for us, right? I hate spam, probably more than you do, right? Probably as much as you do. But to make sure you never miss another great video, right? Just join our mailing list and you'll get a nice friendly email from me every evening when our nightly newsletter goes live. To do that, all I need is your name, your email address. Make sure you give me a real email address and then hit that subscribe now button, because don't forget, I'm going to send you a welcome email. Inside that welcome email, we'll have a verification link that you got to verify your inbox, as well as a bunch of goodies so you and I can get the most working together here every evening on this newsletter. So if you're serious about your trading career, make sure you pause the video, grab that sign up form at the top of our website, right, and join our mailing list, and then check your inbox to verify that you got the verification email. Now, also, don't forget, before we go any further, though, too, I need your help. Right? After you're done joining our mailing list, hit up the comment section below the video and give me some feedback, right? I'm always dying to hear, what do you love? What do you hate? What would you change about this newsletter? How would you, if this was your newsletter, right? If you were pulling the strings back here, which markets would you focus on? Which time frames would you use? Which setups would you talk about? What's your favorite way to use it? I always ask people, right? Are you watching the video at night, or do you watch it before you take your first trade in the morning? Do you just watch only the market that you trade? Or are you like me and you watch everything and you kind of cherry pick where the best setups are? I'd love to hear from you down in the comment section. And while you're down in the comment section, giving me some great feedback. Again, don't hold back. I want all the good, the bad, and the ugly down there. make sure while you're down there, give me a thumbs up on this YouTube video. It goes a long way at helping me to expose this video to other traders. So thank you for the feedback. Thank you for giving me a thumbs up on the YouTube video, and make sure you join the mailing list, subscribe to the YouTube channel. That way you never miss a beat here at SOT. One more thing here, and don't forget, right? I'm always here if you have any more questions. You know, we get so many great questions every day here in the office. Best brokers, charting software, data feeds, which markets are the best right now, how to get into the free pass for our trade room. If you have any questions at all, right, about anything that we talk about here tonight, or becoming a client, or anything at all, call that toll-free phone number in the upper right-hand corner. Use that live support tool if you don't want to call the toll-free phone number. I will pick up that telephone, answer all your questions. No chat bots, no call centers, no long hold times. I'm old school. You call my office, right? I actually pick up the phone. I love talking to my clients, and I hope we get a chance to talk to you here soon as well. So call the office, drop me some feedback, give me a thumbs up, right, if you love this video and you watch the video every evening, right? But this train is leaving the station, so let's roll those sleeves up and let's get this party rolling. Tomorrow is Thursday, May the 23rd. It will be the last full day of trading until after we come back for the Memorial Day holiday weekend. Now, just to bring you up to speed, we haven't talked about this in a couple days. We have a very, very big holiday weekend coming up right around the corner here. You'll notice that there's an early close, 2 o'clock Eastern time, right? Pretty much everything closing tomorrow here in the U.S., right? Obviously, European markets, right? Asian markets will do their thing, right? But a very, very important piece of information, it's a half day on Friday. Now, we also have next Monday, the markets are closed on the 27th. So we've got quite the extended holiday break. What that means to us for tomorrow is it's go time. Right? Tomorrow is going to be a day where the sense of scarcity, the sense of urgency is going to be in full display. And what I mean by that is, we as proprietary traders, as individual traders who manage our own money, right? Most of us, I at least assume, do. We don't have that sense of urgency. But let's say, though, that you were an asset manager or you worked for an asset manager, right? And you got to trade, right? The only way you make money is when you trade, right? That's one of the hard parts about being an asset manager. It's one of the benefits of not managing other people's money is that you can work on your own terms. You want to take the weekend off, go out of town to spend as long time as you want. If you work for somebody else, though, right? If you're an asset manager or you work for an asset manager, right? Or maybe your boss is just a you-know-what, right? But there's going to be a sense of urgency tomorrow to get all that work done, right? Managing positions, hedging positions. Imagine you've got a big open position. You've got to hedge yourself, right? Up and down and sideways going into a very... Who knows, right? I mean, the way the markets work right now with the news back and forth between U.S. and China, right, with news coming out of Europe this weekend, I mean, we could have a completely different world by the time we come back on Tuesday. So a lot of traders tomorrow, the big money, the big elephants in these markets, right, the big whales that move these markets around, they've got work to do tomorrow. Now, when do you think they're going to get to work? Are they going to come in late, do you think? Spend some time around the water cooler, check their Instagram page? No, they're going to get to work right off the bat early in the day tomorrow. What that means for you is expect the action to be hard, to be fast tomorrow morning, or the other side of it is it may be very, very quiet. Usually these types of scenarios are either going to be heavy volume for the first few hours as traders work their way through their must-do list, right? Or sometimes, and I'm hoping we don't get this, but sometimes it's very, very quiet, right, leading into this holiday weekend. So I'm really kind of curious to see what tomorrow is going to bring. Now, we may get a clue in some of the news that we have tomorrow, right? Let's talk about some of the news that we have coming out tomorrow. Well, maybe we should list off the news that isn't coming out tomorrow. That might be easier. I'm kidding around with you, obviously. Tomorrow morning, first things first, if you are in Europe, we have the ECB meeting minutes coming out tomorrow morning. This is the same, right? This is the same thing that we heard from this afternoon, right? Wednesday afternoon, the FOMC meeting minutes. Well, of course, right, we've got the ECB meeting minutes. These are the meeting notes that took place in the last ECB announcement, right? 2 weeks ago, we heard Draghi and the ECB crew talk about rates, right? Talk about stimulus. And he came out a few weeks ago and said, we are prepared to throw the kitchen sink at this if we need to. Will those ECB meeting minutes, will they jive with that statement? That's what everyone's looking to see tomorrow, right? Usually those ECB meeting minutes will come out just before we get started at 8 o'clock Eastern time in the U.S. session. But that's the small news tomorrow, believe it or not, right? The big news tomorrow is it's election day, right? It is election day in Europe, right? I believe it's the entire European continent. I'm obviously not in Europe. I'm in Los Angeles. But from what I've read about the topic, it sounds like pretty much every country in the European continent there is going to be electing parliament members, right? So we have a parliament election coming up this weekend, and that's Thursday, Friday, Saturday. We're going to apparently hear the results by Sunday. So a little bit different, right? A little bit different way they do it in Europe than here in the U.S., right? We do it all in one day here in the U.S. They've got it scheduled out, right, in Europe. And I apologize if I'm butchering some of this information for you guys. But the bottom line, though, is we got big UK elections tomorrow, big Brexit, right, related exit elections tomorrow. So very, very, very busy London session before we get, right, into the U.S. session. So what I'm hoping for is, I'm hoping that with this news early tomorrow, before the U.S. session starts, I'm hoping the markets are relatively quiet through that, and then we can get all the fun built into that first couple hours, right, of the U.S. session tomorrow morning. If you are in Europe, if you're in London, okay, or you know, if you're in the European time zone, you're trading Europe tomorrow morning, just be aware. Like I mentioned, this could be all hell breaks loose, or it could be very, very quiet, right? And there's good and bad to both of them, right? If it's quiet, stay patient. If it's whipping all over the place, wait for your setups, right? And don't chase those moves. I'll obviously walk through all of our clients as well, right, for this tomorrow as well. Now, most important thing for the U.S. trading session, right, as we go into it tomorrow. Again, expecting to see a rush of volume early in the session, and that would be 8 o'clock to 11 o'clock Eastern time tomorrow. I've got jobless claims at 8:30, but honestly, I don't expect that to be the big news. I expect that new home sales number tomorrow at 10 a.m. Eastern time to be most likely the climax of the day. Pending any, unexpected shenanigans that come out of the White House or the ECB tomorrow afternoon, or who knows, right? We may hear from China tomorrow afternoon as well. Pending any unscheduled announcements, Twitter, whatever these days are crazy, right? Pending any unforeseen announcements, I would expect that first half of the day to be very, very good tomorrow morning. And again, with the new home sales number at 10 o'clock, I would expect that to kind of be the climax, right? So 10 o'clock into 11 o'clock, 11:15, 11:30. I would assume you've got to have a pretty good reason to be trading tomorrow after 11 o'clock because, again, all the big players, they're gonna get their bullets out of the chamber tomorrow early, right? And all the rookies, right, who are not paying attention are probably gonna be the ones that are left holding the bag in the afternoon. And then again, on Friday, just so you know, I will not be here tomorrow night to send out tomorrow night's newsletter with a half day on Friday. I would be very, very careful trading on Friday morning. Be very, very careful on Friday morning. If tomorrow is a half day, so to speak, right, Friday is a quarter day, right, a third of a day, right? You've literally got probably between 8 o'clock and 10:30 on Friday morning to make your money. I would recommend, honestly, enjoy the weekend. Enjoy the weekend. There are so many times to make our money. We don't need to go trying to thread the needle during a holiday weekend. And not just any holiday weekend, right? It's probably the first weekend where you're going to get some good weather, right? So grab the kids, grab the dog, grab grandma, grab whoever wants to go and have some fun this weekend. And we'll see you guys back here on Tuesday, right after that holiday. Again, Monday, markets are closed. Friday, half day on Friday. And again, no newsletter from me tomorrow night. This will be my last newsletter of the week. Next time you see my ugly mug, right, and hear my bad trading jokes will be next Tuesday evening. All right, now that we know the plan here, now we know the schedule here for tomorrow, let's break open some charts. Over on the crude oil right now, first of all, crude oil goes 1, 2, 3 big legs down, right? 3 legs in one direction. We've talked about the rule of 3 in so many different ways on this nightly newsletter. But typically, though, when you see a market go 3 big legs, usually the following day is a range. And we usually see a trading range develop, right? Because the market's gone too far for most people to want to sell. But at the same time, it's so bearish that nobody wants to buy, right? I mean, who wants to buy this thing right now? Nobody wants to buy this. It's way too bearish, and it's gone so far down that nobody wants to sell down here either. Okay, so when we see a trading range with a bear bias on it, you really want to think of really 5 different scenarios, right? Let's say, again, a bear market down into that trading range. Here are some scenarios that you want to consider. First of all, being a seller, right? Being a seller. There are 2 ways to sell this market. One is selling with a buyer failure pattern off that high, right? We call these buyer failure patterns, and we'll talk more about this, right, in a moment. The other one is going to be a 1, 2, 3 breakout through that low, right? So a buyer failure off the high, right? Or a 1, 2, 3 breakout through that low. Those are the 2 types of sell setups I'll be looking for in that scenario tomorrow. What about the buy setups, though? Again, we've got a bear market, right, into that trading range. How could I buy this now? A little bit different, right? With this bear momentum, I now need to be thinking, I do want to buy it as it goes lower, but the problem is those bears, right, they're going to try to keep selling this. They'll try once, they'll try twice, and that's exactly what I'm looking for. I'm looking for what we call a nested failure pattern. The bears will try once to sell the pullback, let them try twice to sell that pullback, and then we'll be buying right into those stop losses, right, for a short covering rally back up into that trading range. How else, right? How else could I buy this? I could buy it on a 1, 2, 3 breakout, mark up those highs, mark up that low, right, and buy that pullback. That one obviously takes, right, a little bit of patience, but boy, oh boy, is it a great setup, right, once you get it. So there are now 4 total scenarios for you. And as I mentioned earlier, right, if the 5th scenario, obviously here, right, the 5th scenario would be if we sit right inside in the range, right, we want to stay away from that range. Anytime I see a trading range, I want to buy low, I want to sell high, and I want to avoid, right, the middle of that range. Okay, now how do you know which pattern to use? It all depends on momentum. If momentum is bearish, I can be a lot more aggressive selling high, and I've got to be a little choosy to buy low, right? If the market is bullish into that range, just the opposite, right? I can be aggressive buying low. I got to stay patient selling high. It doesn't matter what we have. I always want to avoid that middle. So as I look at this, right, as I look at the crude right now, I can easily see these big moves down. We know that we're bearish. What we don't quite know yet is where the range is. Right. So right now I'm kind of just making an educated guess, right, of this trading range. So I'm expecting to see a range down here, and if we get that range to form, right, my go-to pattern is always going to be a buyer failure. So what I'll do is, if we do get this, again, if we do see it hanging out inside this range right now, what I'll do is I'll wait for the buyers to try to take it higher. Once I see those buyers taking it higher, then I'll look for that moving average to come over. I'll wait for the buyers now, try to buy that pullback. Once I see those buyers try to buy that pullback, I'm looking for a sell right into those stop losses. I'd love to use the top of this channel, right? I've got this channel coming down. I'd love to use the top of that channel. That'd be great. Now, being a buyer as we go lower, though, that's not going to be as easy, right? Because, again, we have that bear bias to it. If we run lower here now, I do still want to be a buyer. I just have to make sure I do it the right way. And what I'll do is I'll let the sellers, because, again, it's so bearish, you can't use the same pattern that you would to buy, right, as you would to sell, right? You just can't do it the same because we're not the same directional bias. So this time around, I'll look for the 1 try for the bears, the 2 try for the bears. Make sure you see clear 2 attempts, right, for those sellers. Once you see them try twice, right, you've got the aggressive sellers in, right, the more conservative sellers in. Notice how I draw these at a higher high. They need to be higher prices because you want sellers. Remember, sellers will always try to sell higher, right, get a better entry price. Once I see bears try once and try twice, then I'll look for that rally then going back up, right, into that trading range. Now, what I really hope that we get tomorrow is the 1, 2, 3 reversal. Because anytime we see this much move in one day, I mean, there is built in a ton of available profit if we can get a good, strong run. Now, the problem is a lot of times what happens is the market will try to make a run. Buyers will get way too aggressive and try to buy it thinking that they've already got this thing reversing. But in all reality, what happens is professional traders, right? People like you and I who are educated on this stuff, right? We're not buying that and we're selling right into their stop losses once they fail. So what you really want to do is you want to wait for that short covering rally. Be patient, wait for the pullback. If they can hold that pullback, we call this a 1, 2, 3 reversal or a 1, 2, 3 breakout, whatever you want to call it, right? The bottom line is we wait for proof, right? We wait for proof. Professional traders wait for proof. Professional traders look for reasons not to trade, whereas rookie, retail, right, inexperienced, right, kind of naive traders, they look for reasons to trade. It's literally black and white, right? Night or day. Professional traders are disqualifying trades, right? Rookie traders are basically pre-qualifying trades, right? So as a professional trader, we are very pessimistic about that, right? We're not optimistic about that reversal. We're looking for it to fail. If it does reverse, though, don't worry about missing the reversal. You didn't miss anything. It's not a reliable pullback at that point. Then here's the deal. Mark up that high, mark up that high, and then mark up off that low. You'll notice this will oftentimes miss that first pullback. You're marking it off that low. Then that gives you this little sweet spot down here, right? And you can get that pullback from there. Usually what happens is the moving average will come up. We'll then go below the moving average, and you'll see, if you kind of zoom in on this area right here, what will happen is the market will go up, it'll pull back below the moving average, run into the low of that hidden channel there, and you'll see a seller failure right off that low, right? Those very, very reliable seller failure patterns in a bull market, right? It will be bullish at that point, right? So imagine, right, that's kind of the setup you're looking for right off of that low. Now, I'm only drawing these things out right now, right? I'm obviously drawing this as far as kind of like what I'm looking for here, right, tomorrow morning. I've got a great free trading course for you, though, with hundreds of real examples of these patterns, and I'll put a link for it in the upper right-hand corner. I'll also put a big red button to register for that course right below tonight's video on our trading blog at sidewaysmarkets.com. So don't be afraid to grab the big red button below or grab that link right in the upper right-hand corner as well. Grab your access to the free course, and you can learn all about my favorite patterns, the 3-step strategy. I'll even send you an invite to come out and test drive, right, our trade room as a guest. So by all means, grab that free course in the upper right-hand corner. You'll love it. Everybody does. Now, what if we go lower here? Well, if we go lower, I think it's really important that you understand where we are right now, right? Because if we go lower right now, here's the reality. Look where we are. We're right around the low of this range. So it's going to take a small, I wouldn't say a small miracle, but we're going to have to see a lot of strength going lower here tomorrow for me to feel comfortable being a seller as we go lower. So in all reality, I would much rather be a buyer on this market, as crazy as that sounds right now, but only if we can get below the range. Right? So again, if we make a run down here, then it's the 1, it's the 2, and then buy back up. Just because I think we've already got where we came from, right? And if I'm wrong, then I'm wrong. And you know what to look for, right? If we get a 1, 2, 3, right? Mark up that low, mark up that high, and we're selling off the high of that new hidden channel, right? The same basic idea. If we go higher, right, I'll apply that same idea, right, as we go lower. All right, guys? So that's the plan for oil tomorrow. And again, get to it early, right? Get to it early because as I mentioned earlier, right, tomorrow's going to be one of those days where they're going to probably cram everything in, right, in those first few moments. Over here now to the E-mini S&P. So now you kind of know the basic idea of a range-bound market. Now let's flip it on you, right? Let's flip the coin here now. Now instead of a bear market, right, we now have a bull market, right? A bull market now, right, on the E-mini S&P, then into a trading range. Now, a couple things about a triangle, because triangles are a little bit different than ranges, right? So here we have a triangle. Triangles are very special because they have kind of pivot points to them, right? Edges to them, if you will, if I can talk here, right? That's the kind of the difference about a triangle. What really is special about triangles is that you want to really hit those edges, right? Those edges are where you're going to find, right, the best stuff there. Okay, whereas in a range-bound market, I'll use range expansions. So what you really want to do is you want to look and find that swing, right? That swing, that swing. That's your good stuff right there, right? Now, just like any other range, you want to avoid the middle, right? Avoid that middle. I want to come down and buy low, right? How do we buy low? We buy low looking for failure patterns, right? Those 2-try failure patterns. Okay, I can be aggressive buying low because we have that bull bias, right? But at the same time, though, if we go higher here, what's the option going higher? Well, remember, we're bullish. So I've got to be a little bit more delicate, right? I got to use some finesse here. I got to give the buyers enough rope to wrap around their neck, right? Let them go 1, let them go 2, you got it, and then down from there. Right? Let those buyers try a couple times. And once we see the aggressive buyers and the conservative buyers, then we can sell right into those stop losses as we go. And again, right, same basic idea, right? 1, 2, 3 breakout, mark the high, mark the low, and we're buying the pullback. Or same thing to the downside, 1, 2, 3 break down. You got it, right? Mark up that low, mark up that low, mark up that channel again, right? And then of course we're selling off the high of that channel. And again, I'm just drawing this stuff out right now. I literally have hundreds of examples of this in that free course that I mentioned earlier, which you guys will love. So I'm drawing that trend line down. I've got the trend line up. And you can kind of see where the big levels are, right? Level right there, there, right? So draw your levels up there. Those are the good stuff, right? And then, of course, down here, the lows are a little bit harder. There's not as much to work with down here. But, mark a few above, mark a few below. And then we're going to use those levels, right, for the failure pattern off of that low. Or what was it again? The nested failure, the 1, the 2, and back down. Again, stay away from the middle. Right? Stay away from the middle. You can definitely see these guys and gals in the S&P right now are still kind of dealing with that same range, right, that we had yesterday. So just keep buying low. Just keep selling high, and again, keep your eyes on breakouts, right? If we do get a breakout, right, a 1, 2, 3 breakout, again, what do? We mark up that high. We mark up that low. Buy those pullbacks, right, off the low of that hidden channel. Same pattern as we go lower. I think the hardest part here on this S&P is going to be staying out of the middle. They made it very clear today that they were comfortable right in the middle of this range. What we're kind of hoping for is hopefully we get some sort of spook, right? You'll notice I'm lining up some of these trend lines here, right? Take that main trend line, bring it down to that low, right? This kind of gives us that nice big 1, 2, right? That failure, right? Imagine it, right? Imagine now we run lower, okay? And remember, we're bullish, right? We're bullish. So I can be relatively aggressive once I see that moving average coming over, right? What happens? Moving average comes down. I let sellers try to sell off the moving average. Now I know where their stops are, and I can look for a failure into a breakout pullback, a failure into a pullback, and then back up into that range. Those are two easy setups, right? We can look for as we come off of that battle zone. And where would my targets be on this? My targets as I buy low, right? If I buy low here, right, I always like to take a target at the opposite side of the range. And then I always like to leave a runner just to see how far it will go. And I'll use that 2-candle trailing stop that you'll learn about, right, in the free trading course. So you'll learn all about that stuff in the free course that I mentioned earlier. For now, though, buy low, sell high, avoid the middle. And again, keep your eyes on breakouts, but don't try to predict breakouts, because we see big, strong moves that could potentially be breakouts really quite often, right? And they're just great buying and selling opportunities instead. They're not breakouts. Over to the Nasdaq here. Look at the Nasdaq right now. Nasdaq, same basic idea, right? Is a bullish overall bias. Now, remember from last night, we had that small range here, right? Well, they've missed, right? They didn't miss anything. They kind of moved that range down here now. And it looks kind of like the S&P, right? They had a bit of a suspicious range there yesterday. No doubt about it, though, we definitely have, right, a range-bound market. And again, mark up your highs, mark up your lows. There's really not a lot, right, off the low here. I've got this level down here. That's a big level for us. Obviously, that level down here is, but that's a little bit too low for us to want to buy. It will be a pretty bear market at that point to be a buyer. And then, of course, overhead here, right? I've got this level overhead. I've got that level overhead. So, it's same basic idea, right? Stay away from the middle, right? Stay away from that middle. We are bullish overall, so I do want to be a buyer, right, below that range. Now, speaking of being a buyer below that range, right, couple things that are interesting here about the Nasdaq. First of all, a very strong move off those highs, right? Very strong move off the high. Anytime I see a strong move, I know I can use that as a measured move for another level of support. Okay, so we really do have a lot of great levels down here. That measured move's a great level that we can use. And then again, I'm also drawing a trend line off of these highs, bringing it down to this low, and that's a level that we can use as support. So we might really get a very strong move down here, get that moving average to come over again, let those sellers try to sell off the moving average. Once we see those bears try selling off that moving average, now we know pretty much where they're trying to go now. We know where the stops are. We can buy into those stops. Remember, though, don't chase after it as it goes higher, right? Don't chase it, right? You want to be buying right as it's going back above that high, right? You're buying right into those stops. You don't want to buy up here, though. Now you're buying too high. Now you're buying where more sellers will come in, where buyers will start taking profit, let it pull back, and you can buy the pullback. Okay, so it's all about thinking about the mindset of the market, right? Like as we always say, you want to buy nice and low. Okay, you don't want to buy high, because when you start buying high, what's happening? The professionals who already got in nice and low, the big money traders, they're now getting out of their positions. They're taking position profit. And when they take their profit, the price will pull back. So you don't want to buy it as it goes higher here, because professional traders are already in and they're now getting out. Okay, they'll then get back in if it holds that pullback. So what I always do is I always go for a 1-to-1, right? The size of that. I always try to get that 1-to-1, grab that first target, and then look for that pullback from there. Grab it up from there. Okay, so again, you'll see a lot more of details on this setup inside that free trading class I mentioned earlier, but at the same time, that's the general idea of what we're looking for as we go lower. If we just sit here, don't do anything, right? Grab some popcorn, just stay focused, okay? Don't get distracted too badly with social media and chat rooms and things like that, because I'll tell you right now, the last place you want to be as a rookie trader is surrounded by other rookie traders in a chat room somewhere, right? It's amazing how when I was a rookie, I thought for some crazy reason it was a good idea to hang out with other rookies and think that was maybe that was going to be helpful. You're not going to find professional traders hanging out in free chat rooms. This is the bottom line, right? Professional traders, they're not going to tolerate the toxicity of those free chat rooms. The problem is chat rooms, nobody's telling you their losses. All you see is winners. And it makes you think that you're the only one not making money. It's a mind, it messes with your head. So stay out of those chat rooms. You're surrounding yourself. It's like the blind leading the blind, right? Anyways, so stay focused if it stays right in the middle there, right? And then again, if we go higher here, remember it's a bull market, right? So if we go higher here, it's 1, it's 2, and then down, or it's the 1, 2, 3. I have no problem taking that breakout. I just have to wait for the breakout to confirm, right? Find that new high, find that new channel, and we're buying the pullback. Okay, really, really great stuff here in the Nasdaq. Just got to get a good setup right now. That's all we need here now. Over on the gold. So gold is, at first glance, gold looks nice and nice and timid. It's not that difficult, but we do have to be aware of a couple things here. First of all, we have a directional bias, and that bias is just a little bit bullish right now. Not a lot, not as much as the S&P and the Nasdaq, of course, or as bearish as crude oil, but you can definitely see we are on the more of a bullish side. What I think the first and most important clue is this tiny range, right? That tiny range. You'll notice what happened, right? The market went up, the buyers try to buy it, and it collapses back in. They did it again. They go up, the buyers try to buy it, and it collapses back down in. These are classic failure patterns, right? Now, I can take that trading range, and we've already talked about, I think, enough at this point, what the goal is, right? Buy below the range. I can take that range and the amount of the move above the range, I can now project below the range. And that gives me a level of support. So if I take that trading range and I go in and I add, and you could use really any technique you want on this. You can eyeball it too if you want. But just real quick here, right? That's going to give me now, that little bit extra support level down there, right, that I can use. Okay? Now, keep in mind, right, pendulum swings are a basic guide, right? So we may go right to it and bounce. We may go a little bit ahead of it and bounce. We may go through it and then turn around. So just be aware, pendulum swings, because of the nature of momentum in these markets, it's going to be difficult to get those pendulums exactly to the tick. We do see them, but don't be surprised if it cuts off a little bit early or it slides through it before coming back up. So this area down here is very, very enticing, right, for a buy because of what we call, right, the pendulum swing, right? The pendulum swing. So this range is very, very important in that sense because it gives me that obvious area where I want to be a buyer, right? Amount above, amount below. And to do that, right, I want to go down, let those sellers, let's get rid of this here real quickly here for you guys. You guys can see that already, right? If we go down, what's going to happen? Moving average comes over. Yep. Sellers will try to sell into it. Okay, get the pendulum swing. Then we know where stops are. Once I know where stops are, now I know where sellers, right, get into pain. Now I know where the pain point is, and I'll buy right into that pain point, right? You're literally buying right into where those sellers go, ouch, get me out of this position. Now, again, you don't want to chase after it, right, because oftentimes this market will jump up and then pull right back into that breakout pullback setup. Two of my favorite patterns in range-bound markets, right? Failures into pullbacks. Failures into pullbacks. Okay, now if we go higher here, right? If we go higher, we're bullish. So obviously it's a little bit different, right? Little bit different, not by much. We go up, buyers try once, buyers try twice, and then we can sell. Okay, so again, it's just down, let those sellers try to sell it, buy into their failure, or up, give them one more shot. One more try. And then we'll come down. Makes sense, right? You're going against the trend. I think that makes sense, right? That is relatively common sense. Now, the second big thing that I'm watching here is this, right? This potential triangle. We're coming off those highs. We're coming off these lows. And you can kind of see, right, where that triangle goes. Now, every once in a while, you will see this happen where a range, and I'm talking about the original range, will kind of transform, right, into a triangle. Now, how will you know that? How will you know when the market is paying more attention and we should too, right? We know it because if this thing just keeps on bouncing around inside this triangle, you know, and a lot of traders will struggle with this. I know I was always kind of questioning this as well when I was a rookie. Do I still have to worry about that first range? Not so much anymore. Once you see the market, if we see the market start to really settle in to this triangle, now you know the strategy, right? Remember, mark up these lows, mark up these lows, mark up that high, right? We just have to use the same strategy on a different range. Okay, so it's kind of the same thing we just talked about, right, on the Nasdaq and the S&P. Very, very similar strategy. The only difference on this, though, is it just makes sure you're aware, right? If you're waiting for the market to be down here for that pendulum swing, but all we're getting is back and forth inside this triangle, we probably aren't going to get that pendulum swing. They probably have been distracted by something, or again, maybe the ECB meeting minutes, or maybe the EU Parliament elections tomorrow, right, could be impacting these charts here. So we're definitely keeping our eyes open on the evolution of that trading range. A lot of the same stuff, though, as the S&P and the Nasdaq. I'm going to take that trend line. I'm going to bring it down. This sets up for a beautiful level of support into a two-try failure pattern, going back up into that trading range. The hard part's going to be just stay out of the middle of that range. This whole area right there is really going to be a toxic area to be trading. I want to go up. I want to be a failure back down, down, failure back up. And again, right, because we're bullish, 1, 2, 3 breakout, mark up the high, mark up that high, bring off that low. There's your sweet spot right there, right? And we're trading right off that sweet spot, right? Or it's a 1, 2, 3 breakdown. I have no problem being a seller as long as we get the strength to push through and as long as we get the pattern, right, that we're looking for here on the gold. If I had to guess, I would guess that gold will be pretty slow overnight just because of the ECB meeting minutes coming out right before the opening bell in US, but we should pick up shortly after that comes out, so stay patient, right, if we're not moving very well here. And then last but not least here, over on the euro is, for the most part, not much has changed on this euro pretty much all week. We went into a trading range earlier this week, and we have pretty much stayed the same. I debated whether or not I wanted to abandon the range and call this a triangle, but honestly, it doesn't really matter. The middle of the triangle is the middle of that range. I mean, this is about as consistent as consistent gets right now. If you look up consistent in the dictionary right now, you get a picture of this chart here. So the only difference is we're bearish, right? So in a bearish market, I'm looking for the price to go up. I want to see buyers try to buy the pullback, and we'll sell into those stops. If the market goes down, though, right, here's a good example back here, right? We saw this earlier in the week. Price goes down, let the bears try once, let them try twice, and back up we go from there, right? So if we do make a move lower here, let them try once, let them try twice, and then back up from there, right? Again, very similar pattern. Just wait for them to try one more time. Be a little more disciplined, right? Again, we go up, let the buyers sort of buy the pullback, right? And we fail. We go up, buyers buy the pullback, and they fail. We go down, bears try once, try twice, and we fail. All right? And sometimes you don't get it. You like that one right there, right? Sometimes you don't get the pattern. Welcome to life, right? Sometimes you show up early, you leave late, and you don't get what you were looking for. It's part of the business. That's one of the big reasons why in our trade room every morning, we always focus on these big 5 markets, because you never know what you're going to get. Some days might be slow on one market, and you need to have the flexibility and the diversity, right? I like to have one currency, one metal, one commodity, right, or oil, right, one energy, and a couple stock indexes. That way there's always something, right, that's going to be moving here each day. So again, tomorrow, euro and the gold, those will be the ones that I'll be most concerned with tomorrow, just because of the European elections and, of course, the ECB meeting minutes. The Nasdaq and the S&P, obviously we continue to listen in on news headlines about most recently it was Huawei or, whatever the Chinese technology firm, this trade war kind of heating up right now. And oil, right? Will we get that big short covering rally tomorrow? I don't know, right? It's anybody's guess. What I do know, though, is we got to get to it early tomorrow, right? That is for sure. Earlier the better tomorrow morning. I would say the meat and potatoes, 8 o'clock to 11 o'clock tomorrow, maybe even less. So keep your eyes on the time. And remember, if it's real slow out there, you know why, right? Lot going on here ahead of a holiday weekend. Don't force it. Like I said earlier, there are so many times that we have great setups. It doesn't make any sense to go kind of forcing a square peg through a circle hole like that. So if we're not getting much tomorrow, sit on those hands, right? Or get out of the office, right? And as always, I'll be here to answer questions if you have any questions at all. And speaking of questions, we cover all the questions, right? We find all the great setups together every day in our trade room, and all of our advanced members are there with me. So if you want to do this with me, because, we all know there's money to be made out there. We all know there's life-changing opportunities in these financial markets, but it takes some skills. It takes a strategy, right? You got to have a rule-based strategy, and you got to have the mindset. You've got to think like a trader, not thinking like a human, right? As we said earlier in the video tonight, if you recall, professional traders are seeking to disqualify trades, whereas rookie traders, novice traders, naive traders, they're trying to take more trades. More doesn't usually mean better, right? Most of you probably have already learned that in life overall. So thinking like a professional, it takes a little bit of getting used to, and we do that together every day in our trade room. You can register as a brand new member and join me every morning, Monday through Friday in our trade room. Grab the advanced course. It's right below the video tonight on our website. If you're not ready yet to be a member, that's okay. Grab that free trial right to the left of my ugly mug. As part of that free trial, you get access to our trade room on a free pass. You'll get the free trading course with all 4 of those trade setups, hundreds of examples of real opportunities you find every morning. Not to mention that free trial is filled with all kinds of peeks behind the curtain so you can see what it feels like to be in our membership classes and as a new client here at School of Trade. Don't forget, call the office, send me an email. There's live support right here, right on our website as well. Whatever means of communication, I hope I get a chance to speak with you and work with you soon as a new client. And even if you're not a client, don't be afraid to pick up the phone and call me about brokers, data, markets, free passes, anything else you have questions about. I'm always here standing by to help you guys out. If I don't see you guys tomorrow, right, have a great day in the markets. And as always, don't forget, right, Friday closed halfway, Monday markets are off. We'll see you back here next Tuesday evening on the next edition of our nightly newsletter. As always, my name is Joseph. Thank you so much for tuning in here. Have a great, great holiday weekend. Be well out there. Be nice to each other this weekend. And I'll see you guys next time. Adios, amigos. Bye-bye for now.